Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, July the 2nd. My name's Eric Wilkinson. Yeah, you may recognize me as the Wolfman, but I'm here to teach you guys some different option strategies that you can implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond because we don't have a whole lot here in the United States. Tomorrow we are pretty well weighted on some economic data with crude oil inventories and several other things. But and then that's because of the Thursday holiday, like natural gas storages and stuff like that are being rolled to Wednesday. We still have unemployment, non-farm payrolls on Friday, okay? So that one's not getting moved because of the holiday. All right, on to the overall economic data. We've got German retail sales coming in at negative 0.6%, expected to be a positive 0.5. They did revise last month's number up from a negative 2 to a negative 1, so a full percent increase. That kind of makes up for the headline number, which was missing by about 1 percentage point. But I think that that headline number is showing that it's a continuation of bad retail sales. Even though they revised last month's number up, it was still in negative territory, right? Still in more negative territory than we are right now. Although that first number was a shocker. Nice to see a revision, but again, still not looking too good overall. And then we got Great Britain's construction PMI, which is Purchasing Managers Index, came in at 43.1, expected to be 49.4. Anything below 50 is contraction in the economy. This isn't one of the major economic data points, though, that they look at, but this is the second time in a row we've seen this number below 50. Second month in a row. Out of the last 4 months, though, we've had out of the last 5 months, we've had 4 that are below 50. So that is not a good thing for Great Britain and the overall economy there. Then we've got here in the United States, Williams speaking, who is a FOMC member, and some vehicle sales, stuff like that. But that's about it for the most part with the economic data. We're back online. I don't know if you guys got to see that glitch, but I just got a glitch. All right, so that's it for the economic data. Let's look at the overall markets. We've got crude oil moving back below those 2 Fibonacci lines that we've been talking so much about. That was going to act as support. I thought that we might hold that support, but you know, everything being equal, it's better for the economy at this point, especially what we're seeing across the pond with the market, or the economy's pulling back. We're seeing a lot of these PMI numbers below 50. They need to have velocity of money, and one of the ways to create velocity of money is to have very low gasoline prices. And here in the United States, we have relatively low gasoline prices. As a matter of fact, we get in those mid-50s, you can see gasoline prices start to go below $3 a barrel. Well, maybe not in California because they're giving you a buck tax on that. So they're $1 higher than the rest of the national average at this point. So if you're in California, this really doesn't apply to you because of those taxes. But when we get back down here into the mid-50s, lower 50s, we're seeing gas prices really dramatically fall off. And this is what I was talking about right here. These 2 Fibonacci lines right there and right there lining up with $59 a barrel and $58 a barrel. Now, I would look at that as being a big support resistance area, not so much as 2 right in a row. But we blew through those today. You can see right off the open, market started selling off, and it has been almost unabated to the downside. Not a whole lot of upward buying pressure coming in at this point as it's falling back down. And that makes me happy because I think that that is going to be one of the things that we see that will help us through a bad economy, as when you're not paying a lot for gas and you can go out and buy other little things. That's going to spread that money out amongst different businesses, and then those businesses spend that money in different ways, which creates that velocity of money. You get a lot more out of that type of economic stimulus, if you will. Kind of like when we did the tax breaks. Everybody got money back and they were spending that money differently. That's what I said we should have been doing back in like 2009, 2010, 2011. Give the money to the people because we know how to spend our money better than the government. If you throw it all into one place, it doesn't really spur those economy. back to, strength. All right, so gold's coming, making a little bit of a move higher today by about $13. Last couple of days we had some massive sell-offs in there. I thought today, with this move, we were going to look to cover this gap in between here. So that is something the market is going to be looking at. I thought today we were going to get that drop. It's not really happening right now. That 1400 area that we're at right now, 1400, is really a major level that the bulls and the bears are trying to fight over. Obviously, the bulls want to get a settlement above that 1400. The bears are trying to settle it below there. Now, there's no Fibonacci that I have on support and resistance here. It is just a product of the psychological mindset that 1400 is something that needs to be achieved. So they've gotten there right now. Yesterday, with that settlement below there, I thought that those bulls were going to kind of be on their heels and start to look to puke, and we would go to cover that gap there that I just talked about right here. So that is something that is going forward, I think is going to happen. May not happen this week, but I do think that it's going to happen relatively soon before any type of move to the upside can happen. All right, let's look at the bonds. Are moving higher by almost a point now. And again, the market is trying to signal to the Fed that they need to lower interest rates. Now, all of this, I've talked about it time and time again. China is a wild card in here. And the Fed isn't seeing any inflation, so they can't increase interest rates at this point. They can leave them the same, but we're also seeing some housing issues where people were so used to having low interest rates that they are seeing these higher interest rates, and in the back of their mind they're thinking, I can wait a little bit and get that lower interest rate as I'm seeing them start to downtick again, right, before the Fed does anything. So that's hurting sales for homes, and people are going to be sitting on the sidelines for that. Also with cars, same thing with cars. They go in there, they're used to 0% financing, and they go in there and they're trying to tell them it's like 5% or something like that. Those people are like, I'll wait for the 0% financing. So that slows down on auto sales as well. So as a matter of fact, I've been in the market for a car recently and been going into these, several different auto dealerships, and they are pretty darn quiet right now, you guys. There's not a whole lot of people in there walking around looking at cars, from what I can tell anyway, at least here in Arizona. But it is, it's a little bit biased here in Arizona. It's summertime and there's nothing going on here. All right, VIX coming off. Yesterday we got that doji, and although the dojis and stuff like that don't really show support and resistance so much as the overall equities or some of the other markets show, but you can see like several times we've gotten dojis like that and the market started moving. VIX started moving higher there. We've got a couple more dojis like that where it ended up moving higher. Another good one right there. Even though we had some red bars, we started moving higher. Yesterday, we got that doji right there, and I thought for sure that was going to be a signal for a bottom, which kind of also fell in line with my assumption with the overall markets, making a little bit more of a correction here in the equities. So I thought that I was going to be pretty set up well for today. Obviously, markets are kind of trying to move higher. You can see the Dow Jones Industrial Average is in negative territory, but at any given time it's been in positive territory as well. The top doesn't look so clear here, but in some of the other ones that looks a little bit more clear, especially when you take out the overnight. I can't remember, this has the extended hours trading off. If we put the extended hours trading back in, you can see that this looks like a bit of a top without yesterday's move. You get that doji like that, or even an extension, and then a confirmation to the downside, which is what I was looking for. That would have set up for the VIX. VIX looked like it was a bottom, making it ready to move to the upside, which is usually a signal that the equities were going to kind of start moving down, which is what I was expecting today. Obviously the day is not over, but a settlement below, if we go below 77.64, let's just call it, which is this Fibonacci, we settle below there. That is going to be something that makes this market looks like we are going to come back down to the point of control. But as of right now, there's some strength in the overall markets right now, and it's pushing it, not making those markets set up nicely like the VIX and everything else was. I thought my position was looking really good today. E-mini S&P is very similar. If we take off the overnight inventory or overnight trade, it looks like the NASDAQ, but I bring it back in and it's got, again, that spinning doji or a shooting star doji where we kind of peel it, pop above, kind of get a little bit of a gap, create an all-time high, and usually that is a signal of a top when you get that steam blowing off. You know, we talked about that. We've been winding up, building up energy, and you get that pop to the upside. That kind of has a tendency to be a little bit overdone, and the market wants to roll back over. But as you can see here, E-mini S&Ps are unchanged on the day right now. Now, if we look at the E-mini S&Ps on the daily chart, this is that little bit of a gap to the upside that we created from that overnight that I've been talking about. This was that pent up energy where it's like that rubber band that gets kind of wound up. The tighter and tighter you wind up that rubber band, there's a lot of energy in there, and kind of like with the propeller planes, you wind up that rubber band and then let go of it, and it spins a lot faster once it's wound up. And that's kind of the idea here. The longer it gets wound up, the higher it pops. So we've gotten, you know, a lot of days in a row where we had that pent up energy trying to really battle it out. What direction are we going to go? And then we pop, boom, gap it up to the upside. That usually has a tendency to have blown off the steam and would look to see that roll over. Not seeing it yet, like I said, but, you know, still early on in the day, we could still see that start to roll over. Now, anything with my position, I am looking at a couple of them. I was looking to wait for today for confirmation whether or not we are to the upside or downside. If we start rolling over to the downside, I'm going to hold on to everything. If we start moving, peeling off to the upside, I might pull the ripcord on just about everything because my position is set up for a little bit of a rollover here, and we're not getting it. And anything that makes this chart pattern set up on the technical side, I'm going to look to get out of my positions. All right. And that's about it for today. Other than just getting set up for everything else, not adding anything with high implied volatility is pretty much gold. And everything with low implied volatility, you know, yes, we do have the earnings coming up and that should help me out, but I'm not getting any directional confirmations as of right now. So I don't want to add anything, especially on the debit side where you're at risk of the market just doing kind of like what we've been seeing and just, you know, getting stuck in a trading pattern. Like the last thing I would want to do is be buying options when we start trending sideways, which we haven't had any confirmation of anything other than that yet. So I'm going to hold off on my positions for that and try and get out a few ones that I have on already. So follow me on Twitter. I'll be tweeting those out if I get out of those. Also, if you want to get any other snark, you can follow me. Pro Trader Strategies is another great Twitter site for different market wisdom and or deals of the day. If you want to watch some of my videos, see how I teach, this is a great opportunity for you to check some of those out for free. And follow us on Facebook because I do these daily market commentaries and those get released on Facebook before we send them out to the email addresses. All right, so check it out on Facebook. Give us a thumbs up or a like so that you get first access to those. All right, that's all I got. Other than if you can't take that, take it easy.